let's say we get to June of 2022, we're done with SVOG, we've sent our final accounting to SVOG, they've signed off on it, and now it's September of 2022. Can I pay her whatever the hell I want?
Of
Or am I
course.
still limited to, well, but it's 2022 and I
Oh,
took
I have people, wait a second, let's back up, right? Roundabout. If you think Todd Hames is still making 100,000 because they only can get federal fund, he's still making what he was making. You
right.
just can't use federal funds for more than 100,000. So you could always pay someone more.
Oh,
You
wait,
just
wait,
can't
whoa, whoa,
charge it to SVOG. They're not limited legally. You
whoa.
just can't charge the federal
Oh, oh,
grant
oh,
more than 100,000.
oh, well, that's a very,
Oh,
that's solicited.
absolutely. No, you pay this people what you think fair
I,
market value is for
I
their
pay whatever
services.
I want. I can pay her a bonus. I can do whatever I like. It just
Absolutely.
can't
Their
be charged to
W-2,
SVOG.
I have people with W-2s with $2 million. I can only use SVOG money for 100,000.
And it
And the
doesn't
same thing
matter.
with independent contractors. You're not limited. So, right? I mean, a director giving him
Not
100,000.
an independent contractor, so I just want to be clear again about that. You know,
But
so
I'm just saying, same $100,000 max doesn't mean you can't pay someone 200,000. You can only use the federal money for 100.
okay. So what? So if I were to rephrase this, I think if I were to say between unemployment and PPP and SVOG total, that amount, that pot of money, can't exceed $100,000 for Ariel.
Well, unemployment has nothing to do with it.
Okay.
Unemployment is what she got personally, and she wasn't working for you. So
Okay.
you have to forget that. That's not on your radar.
But
But PPP1,
yeah,
PPP2,
yeah,
employment retention credits, and
yeah.
SVOG, you can only use $100,000 for all of those programs combined
Per year, per fiscal year, whatever,
per 52 weeks.
yeah,
Yes.
for 52 weeks. So, but I can
Well, you
pay
can
her
pay the
more.
person whatever you want.
It just can't be credited against SVOG
Exactly.
or any of the other programs for
Right.
that.
So what I do, right?
Yeah.
Because well, first off, you got to tell your membership, right? Or your people who, I don't know if it's a legal membership, but whatever. Will you tell your peer group that they should know that if they get over $750,000, right, they have to have an audit.
I want to know about that too, but yeah, go ahead.
Okay. Very complicated audit. This is a federal government audit, different than a GAAP audit of the financial statements. So what you have to remember, what I keep telling all my clients, is I need to see a spreadsheet of your expenses from March 1st, 2020 through December 31st, 21, your total expenses, and how much did you apply to PPP1 is one column. So I could trace it to the PPP1 forgiveness stuff. Then PPP2 column, employment retention column, SVOG. The
I'm with you.
balance
I got all
is
that.
what you're funding or you raise money elsewhere. But I need to see that spreadsheet in order to do an audit,
Right.
right? So, but that just tells you how clear it is that
Yeah.
you certainly could pay someone $400,000, but here's how I applied the 100,000 from all the federal programs,
Yeah.
and then here's the 100,000 that whatever I paid or whatever.
Okay. So it just has to be super clear that, yeah, well, I'm
Yes, because
actually,
yes, the federal requirements is we have to be able to trace to your books and records
yeah, okay.
what your total expenses are, what you applied to all these programs
Program, yeah.
to make sure you haven't double dipped, to make sure you haven't
Right.
gone over the 100,000, yada, yada, yada.
Yeah, that's fine. But but the key takeaway for me at this point is, which am happy to hear, I can pay Ariel what I want
Oh, yeah.
in a year. Obviously, I'm paying her. Probably, it sounds like to me at this point, I'm not really going to go back and pay her top off for 2020. We'll just ignore that. I'll just pay her whatever I want in 2021. And
Yep.
the amount that I credit towards SVOG is what we're talking about, not
Yep.
what I pay her. Those
That's
are
right.
different conversations.
And same with PPP1 and 2. Right. And the key here,
Yeah.
too, what I keep telling everyone is
Okay, great.
don't leave money on the table.
Yeah.
Exhaust yourself PPP1 because
Yeah,
it's more restrictive. PPP2,
no,
employment retention credits. The
okay.
balance goes to SVOG on your other, like it's so much
Yeah.
more flexible.
Yeah,
And
yeah,
you
right.
can put in a budget modification if
Right.
you didn't put in, the right line items,
Right.
because that the PPP1, 2, and the employment retention credits are so restrictive.
All right. So can we talk that? I think that clarifies mostly for you, right, Ariel? I think we're pretty clear now. It sounds like I can pay her what I like. the rest of this year. We're no longer on unemployment. We went off unemployment back in March when we got our PPP2, which was to tide us through because of SVOG. We wouldn't even have done a PPP2 if we had got SVOG in time, but that's a whole nother story. So,
Right, but that's the problem, right? Because I don't know that SVOG is not going to audit you and ask to see the cash distributions. That's why I brought it up. Because they made it clear,
Prior
right?
to 2019 or after?
Or in 2019. That becomes the question. We have this with all the people look, again, David's not alone. So we have this question of the FAQs, because that's the only place you'll find it. You won't find it in any federal guidelines because
Right.
any federal guidelines limit everything to 100,000. The FAQs say distributions. Distributions is cash. So I'm getting technical on you, David, because you might want to seek legal opinion to cover yourself. Because if they come back and audit you, it will be 3 years from now. It won't be anytime soon.
Mm-hmm.
They could make the argument until further guidance, because they haven't provided any. They could make the argument, one, oh, well, you're an independent contractor, you're limited to 100. Two, okay, you're an owner, what were your cash distributions? Nowhere have I seen 3 net income.
Can I ask a question? Isn't it sufficient that he paid taxes
No,
and reported that on his 1040 as taxable income?
no, because that's what an independent contractor does, right? An independent contractor gets paid 1099s, and that's what they report on page 1 of their tax return. I'm not saying, I'm not trying to be difficult. I'm trying just to say what we don't have clarification on at this point. So then we turn around and we say, because it's different. So let's take the Jeffrey Seller argument, right? Jeffrey Seller gets a K1 from the production Hamilton. He picks up the net income from his K1, and it shows the distributions he got on that K1. We're not sure right now which number we're going to apply to SVOG. No different than your Schedule C, David. But it's clear Jeffrey doesn't have the independent contractor issue because he's not doing a Schedule C. He's picking up K1.
I mean, there's no way I'm going to be an independent contractor, right? I mean, I own the company, like it is my company.
I agree with you, but I'm just saying, unfortunately, this all comes down to crossing T's and dotting I's, right? And you can't, I have to tell you, banks have made huge mistakes on PPP 1 and 2, and you're still obligated what SBA says in the federal government, regardless of what your bank said, right? So that's, I'm just making you aware for when you're talking to your peer group, there's still risks involved on which, till we get clarification, which category you're in. I do not believe when you're an owner that you're limited to the 100,000. What I'm having a problem is the distributions versus net income.
Right. And we need clarification on that.
Yes.
Right. Because so if I were to then, now going back to 2019, I can certainly document what I actually took out of the business in owner draws. That's money
that's easy.
That would be distribution. Is that what, I mean, there's
At
no
minimum, yes, that would be distributions of what you cut literally. Do you have a separate account for your company versus
account? And and then I transfer my personal.
So the distributions would be that owner's draw, basically.
Exactly. And I can document that very, very specific.
That's the easiest one and cleanest. It's just in your case right now, because some people cash is higher and some people the net income is higher because not everybody.
No, right. We take what we need. And
there was no reason, right? Exactly. You took what you needed.
I didn't take it,
right.
Now,
but so here's the thing. I wonder what the cash distributions are, because what I have with clients, you're always behind like in a quarter. Someone makes in 2019 that number, sometimes they distribute the difference to them. So it depends, timing is everything. So that's why some people, their cash distributions equals like 1 quarter from last year and 3 quarters from this year. Some people do that. But I think you have to look at the 12 months in 2019.
To be safe.
See what the checks were, and then decide right now, at minimum, maybe I want to go to the cash distribution number. We've got till December 31st, 2021 to decide, oh no, now you can give yourself the difference.
Well,
Or take the whole thing and you could always not apply it to SVOG.
yeah, but if I don't know where it's going to come from at some point, but all right, so
Or a corporation or S corp.
it doesn't show up
Is
anywhere.
there any gray area in accounting laws, principles that makes this a question mark for owner's compensation?
Well, it's not owner's comp, again,
Distributions.
yeah, you want to be careful because that's the only things I don't want to get people confused with the S corps and the C corps who do issue themselves W-2s, because then they are limited to that potentially.
So
But-
in FAQs, when they talk about owner's compensation, they're not referring to a Schedule C's owner's compensation of a talent rep?
I can't say what they're referring to, honestly, because it's not been clear. That's the problem, quite honestly. And now we have a whole new administration who has different views. So I'm trying to get clarity all over again, because they're the ones who are going to have to approve these reports.
Mhm.
And I want them, and they keep telling me they didn't write those FAQs. So I keep just trying to get clarification on everything, because the current administration is the one who's going to have to look at and decide if it's an eligible expense or not.
Right.
So this is the gray area. But like I said, the calculation we just went through with David. Now look, there is no gray area. This is cash distribution. So you literally, any check that an owner wrote to themselves potentially could be determined as a distribution. So you can't, again, cash distributions is cash only in that case. There is no accrual method. Now, sometimes what people do is they create loans with their owners rather than distributions. Loans also can be repaid as long as they were loans prior to February 28th, 2020.
Right, I've seen that, but that doesn't apply to me, so.
Okay, but just in general, I'm saying, yeah.
So I'm just rereading this. I'm sure we all know it by heart, but can an entity use funds for owner compensation? Yes. Owner compensation, including distributions and dividends, doesn't say limited to, but it says including distributions and dividends, will be treated as ordinary business expense and thus payable using SVOG funds to the extent that the total amounts involved do not exceed what an owner received in compensation in 2019. I think what you're telling me is that's just vague enough
Yes.
that your advice, it sounds to me, is if I go with the actual amount I took out during 2019, I'm safe. That I should be able to totally back up.
Absolutely, I don't have an issue with that.
An audit's not
It's
going to.
the excess. It's just, yeah.
It's getting to the amount I declared on line 31 of.
Right, now our understanding before this new administration came in, our understanding was you take, for Schedule C, you take what the profit was for 2019, regardless of what your cash distributions were, right? But then you take the person who potentially their cash distributions is higher than their net worth, because it's timing. You can go either way. Sometimes people have higher cash distributions than they have Schedule C. So this is where the rub comes in now. Which way are they going to go? And I personally believe, because they keep pushing back at me on the tax returns, they're going to look at page 1 of your tax return and look at net profit. That's what I personally believe, but I can't show that to you in black and white.
Right. So you,
the Broadway League walked out thinking, okay, so whatever you have as net profit on page 1 of your tax return, whether it comes from Schedule C, whether, like in Jeffrey's case, it comes as a K1, whether, it comes as an S Corp or C Corp, all those flow through mechanisms, whatever it has on page 1 is business net income is the number was our understanding you could go up to.
So if I'm,
but in this case,
okay.
David, it's still related to the original question. I have a couple things. You said something early on in today's meeting, something about PUA doesn't count. So he's subtracting out the money that he got.
It counts for him because he's an owner and he knows he got it, right? As far as I know now, I agree with you. It's still, that to me, everyone felt you should deduct unemployment, but they could come out and say, no, don't include unemployment and you can get even more. I agree with you that it's still not clear, but it's kind of yucky that they would pay you because, again, it's coming from the federal and it's coming from the stimulus package, which is the same.
Yeah.
It has to happen by March 30th.
Okay, fine. All right, so I get it. Yeah, I can pay myself. All right, that's helpful. Thank you. But bottom line, so I will come up with a similar number for 2021, an undercount, whatever you want to call it, shortfall, that I will also be able to pay myself. Let's say that's
Yep.
70,
Yeah.
right? Yeah. So let's say the
Again, not taxable because it's SVOG
Okay.
flowing to you, so it's not taxable.
But doesn't that is he limited on what his distribution is based on what his earned income was that he reported in 2020? Since SVOG is not included in there, it was a COVID year. Let's say he only has taxable income of $20,000 in 2020. Is that what his distribution is?
No. They're based on 2019. It's pre-COVID.
Everything is based on even 2000.
For owners draw and net income.
That's
Yes.
really good to know.
Yes.
So it's not just
Yeah.
based on
Because
whatever.
they're trying to make you whole, right?
Right.
They're trying to make you whole from what you would have made, what you did make in 2019.
Right.
They are flatlining you for 2020 and 21, of course, not giving you a raise, but they're trying to make you whole.
Right. And the question that we really can't resolve here is my whole what I actually took out of the business in 2019, or is it why my line 31 is scheduled?
Right. I got to tell you, like I said, 90% of me feels that it's what's on page 1 on your tax return, but I just always want to tell people I don't know 100%.
Right.
But I would base it on that, and I would base your budget modification on that.
And then at the worst case,
by December we'll know for sure.
Right.
Yeah.
Right. Yeah. Hopefully. Yeah. Right.
Yeah.
Okay. So the other sort of key issue here is the question, because again, with all this money that they're giving me, proposing to give me, it's based on my top line, which is at the very beginning. That's all the money I take in. My commission is 20%, so 80% of the money on that top line is passed through. It goes up to my artists. That's how the business operates. You know that. So, given that, here's the key question. I don't know if you have any answer for it. Am I also authorized to distribute money to my talent who didn't work? All these concerts were canceled. I have a whole I've been very conscientious about I can document to the penny what was canceled in 2020 and 2021. Do I pay them some amount of money through this program? Because that's the only way I'm going to pay off anywhere near the amount of
my understanding, again, just because the grant was based on 45% of your gross income, you have to spend it on legitimate expenses.
Right.
If your talent had a contract, for example, for April 2020 to perform at Carnegie Hall for $100,000, and you got to keep 20%, you have to cut them a check for $80,000. But you have to have that contract to back it up. I'm just saying, that's my understanding.
Yeah. So I think if I hear you right, you're saying, as long as I have a contract, it's there in my files, and somebody wants to look at it, they can see it. For this event that did not take place, but had it taken place, I would have paid them $80,000. That I can now turn around and pay them $80,000 under SVOG.
Up to 100. You can't pay someone more than 100,000.
I got that. That's fine. 80,000.
What if it wasn't an individual and it was a corporation that he's paying it?
So if it's an ensemble, right? The ensemble would say, typically in the contract, if it was 5 musicians, 3 musicians, 3 times 100,000.
Yeah. Or 100,000 divided by 3.
Okay, that's an ensemble. Right. But what if it is what if it's
It's not 100,000 divided by 3, David.
Wait.
You can give them up to 300,000 if there were 3 people showing up.
I'm just saying, what I'm saying is if we're sticking with our one contract of $80,000.
Oh, yes. Then yes.
If it's an ensemble of 4 people.
Right, but if there's an ensemble, then you got a contract for 500,000, we would need to know how many people they were calling ensemble, right? They could have said 3 people for 500, you could only pay them 3. That's what I'm saying.
Right, yeah. I mean, those numbers are just way, the contracts have are $10,000, for
Okay.
5 people.
Okay.
And
I didn't know that. So
that's
that's why I
fine.
brought it up.
So what I was thinking of doing is adding all those up and dividing it by the number of people in the group. And I mean, I can, this is relatively easy to do. And trust me, nobody's going over $100,000.
Okay. So then
But-
that's easy.
Yeah, that's straightforward. But your opinion, and do we know, if this is your opinion, do we know this? We don't know this, right? There's no.
Well, the FAQ said that, right? They said per independent contractor. It says per.
No, that we know. No, the limit.
Well, that's how we're interpreting it. If you're hiring an ensemble, no different than my example of Spotgo. I need Spotgo to tell me how many people worked on my account to give them more than 100,000.
Right. But can we pay for work that didn't happen? I mean, that Nina's been saying, it makes sense. That's the whole point.
That's my understanding. As long as it was already contracted.
Yeah.
What people are starting to do now
Yeah,
is sign a contract now, right? And I'm like, no, you can't do that.
No, it's all, I've got it all documented. That's fine. So,
Right.
so it sounds to me like I can do it. I am pretty sure I know the answer to this. Half of my roster are European-based musicians. They aren't here. They don't live here. They don't, their main taxes. I mean, they pay taxes on what they earn here because we do it all by the book. But they're based in the UK. They're based in Israel. They're based in Germany. I'm pretty sure we've talked about this a fair amount, Nina and I and others, that I better not write them a check under this or make them a payment under this. And issue a 1042-S form, right? Which is not a 1099, right?
No.
I shouldn't do that, right?
No, this is supposed to go to U.S. persons.
Fine, that's what I thought. So I just wanted to
And
make sure.
it's either U.S. citizen or U.S. resident. Is that right?
Mm-hmm.
Right. So yeah, I do have one musician in one group that's based in Tel Aviv, but he is.
But if they give you, right, if they file taxes here and you issue them a 1099, then that's fine.
That's fine. Okay.
Mm-hmm.
And
can it
what
be
about
oh yeah, I think you just answered that question, where they're a US citizen, but they're not residents.
Right.
That doesn't matter.
That doesn't matter?
No, as long as they're,
right. Okay. Now, do I need to get into the
key here, let me back up. The key is that you have a W-9 filled out.
Yeah. Right.
Which is a U.S. person. However they're filing their taxes is their business.
Their business.
Right. As long as you have a W-9, we're good.
Yeah, I have W-8-B-E-N for the others, but that's right, exactly.
Yeah.
Okay, so leave it. So the Europeans are screwed. Sorry, guys. All right, I'm only paying Americans. Fine. Do I need to be concerned whether they have received, say, a PPP to cover some of their losses? SVOG, let's start with SVOG. I have one group that, it's the Chambers of Society Lincoln Center, doesn't matter who it is, I know, but that's who it is, a large organization that has filed for an SVOG. They haven't been awarded it yet, but they're waiting on it. They're going to get an I'm sure they'll get it because.
But that's for their expenses.
That's for their.
1 and 2 is for their expenses. This is income to them.
This is not, they were clear. I asked them, they said, well, we didn't include our touring income in our SVOG application. We didn't do that.
Karen, I have a question about that. You said it's based on their expenses, but the award is based on their income, not their.
Doesn't matter. That's just how to calculate how much somebody was given.
Okay.
David is giving them income. They have to report their expenses under PPP 1, 2, and SVOG.
Mm-hmm.
And
they're not connected.
Not to double dip, not his.
But they're not double dipping. This is income to them.
Well, let's get away for a second, because I know, for example, one of my string quartets, okay, they filed for PPP 1 and PPP 2. What the losses they claimed on those were the losses of the touring that I booked for them that didn't happen.
They had to use PPP 1 and 2. There was no loss calculation. They had to pay salaries to people.
Yes, right.
So that has nothing to do with you giving them $100,000.
No, okay.
They had to take the PPP 1, 2, and SVOG and spend it on legitimate expenses.
Okay. So it sounds like you're very clear about this. I don't need to worry about that.
You shouldn't have to.
No. Okay. So
because you're giving them income.
I'm looking at the canceled concerts. I'm adding it up. I'm doing the math. I'm saying I determined that this is what you would have earned during this period. I'm going to pay you, as much as I can towards it. Might not be the
So,
full amount.
so also think of it this way, right? This is taxable income to them.
Yes.
This is not, whereas PPP 1 and 2, what they got as reimbursement is not taxable income to them. That's also why it's not double dipping, right? Because this is taxable income to them,
Okay.
unless they're tax exempt entity, like an orchestra or something like that. But
That's really good to remind us.
Okay. So they don't need to, it's not necessary that they actually perform a service. They don't have to go out and now do a concert because I'm
no,
paying.
because here was they definitely clarified, canceled fees are a legitimate eligible expense under SVOG. So now in your case, this is canceled performance fees. All my clients had to return ticket sales.
Right, right.
I can put that as an eligible expense on my budget,
Right. So I'm paying.
but
them-
only for the people I really cut a check to and return the tickets is an eligible expense. For you to cut a check for canceled performance, I think is the same thing.
You do. Okay. So but I didn't pay them at the time. That's the difference in the scenario is in your, what you just.
Well, but that's why they went back to March 1st, 2020.
Right. Yeah. I mean, I'm cutting them a check now. I would be.
But that's, I did this also on the tours. I'm telling everybody. So what's happening in the tours is another example, right? People are saying, I don't know if you know anything about tours, but tours say if the presenter has laid out advertising funds and the producer says, I need to cancel a performance, the producer has to pay back the presenter their lost expenses. Many people didn't do that because everybody went, well, you're going to tour, you're going to come back. You'll be back here next year. I'll add it then. I said, no, if you get the SVOG, you have to pay that contract from March 2020 or April 2020 canceled date now.
Mhm.
Same thing as your canceled date in April, because it's can't be pushed forward into
Mhm.
another performance date.
Right. I mean, a lot of these were rescheduled, but they're happening in the year.
But
or
they're
two.
happening now. They didn't.
Yeah.
They could have been going every year.
Exactly.
Like many of
right,
my
exactly.
tours go
So
back to
that-
LA every year, right? So they didn't go back in 2020 and 21.
Right. Yeah, I feel the same way. I don't think it should matter. If it was canceled, it was canceled. It didn't happen when it was contracted to cancel. It happened.
Right.
So that's my opinion too. So okay, now it would be. Do we all agree it would be awfully nice for SBA to very clearly clarify this? But this particular. I mean, I agree. Looking at the FAQs and
Oh, they're going to clarify it, I think. I just don't know when, because they're
Okay.
still going through the application process, so they're not looking at anything else.
Okay.
But we have a whole laundry list, quite honestly, of things they told me verbally they are going to clarify in writing.
Okay, when you're paying these grantees that went through and got money, if they themselves, like, let's say it is the National Symphony, they're not paid individually. Are they limited to 100,000 too as an entity?
Being paid by someone out on the outside paying them?
No. Let's say David represented the National Symphony and he booked them to perform. I'm going to even make it
right, but that's what I'm saying. David paying them is income to them.
Right.
So that's not. There is no $100,000 if it's a symphony and the contract called for X number of people, which it typically does.
Yeah.
Right? It usually says it's a 20-piece string quartet, whatever you want to call it. So if it's 20 people, it's 20 times 100,000. He can't give them more than that.
Right. Okay. So that's how you do the math. You calculate it's a head count times 100. Yeah.
That's right.
Mm-hmm.
So it's not based on. So let's say the contract was for $1 million. I'm going to really be out there. Let's say the contract was to pay them $1 million, and they were going to go perform in LA.
Mm-hmm.
You don't just give them $1 million. You have to ask what's their head count and do it that way.
Yes. You can't just give them $1 million. No.
Somebody in that audit is gonna do that work, right?
Because I'll give you an example. Again, I have independent contractors, that can get paid $500,000. I can't give them $500,000. I can only give them 100. So it's based on headcount. It doesn't matter what the fair market value. No different than a salary person can get paid $400,000. I just can't use federal funds more than $100,000 per head.
Mm-hmm. Right.
And then if they were contracted to perform in Moscow, it still doesn't matter that it was outside the country. Is that right?
Not to my knowledge,
Right.
because
Okay,
they are a
And-
US person who lost revenue.
And mind you, super quick on this, the 1099 that I'm going to send at the end of 2021, the $100,000 limit applies to SVOG funds. This is similar to what we talked about with my compensation, I think. But they're going to earn other money during the
That's
year.
right.
That's fine. If their 1099 might be 100.
It's what you use the money for. Exactly. Their 1099 could be for $1 million. You
Yes.
can only use 100,000 per
Right.
head count.
Got
And
it.
Yes,
it doesn't
that-
matter that National Symphony on their own got a $10 million SVOG
Nope.
grant.
That's their expenses. I do have to go though. I'm
Yeah.
Yeah,
sorry.
thank you.
And
All right.
they,
I'm sure we'll talk again. So
Yeah.
we'll-
just keep me
we'll-
posted.